It's 1:30 p.m. in Lagos, same time in London, and we're bringing you markets, analysis, and insights live from Channels Television Lagos. Here's what's coming up on the program. International Monetary Fund tells Africa to stop waiving taxes in order to fix debt crisis. South Africa producer inflation quickens to 4.3% in August. While Namibia suspends poultry imports from South Africa. Welcome to the program. I'm Bill Ibang. Let's kick off with the markets, shall we? First up, major equities in Africa. Well, Nigeria and Egypt. Nigeria is back from the Muslim holidays, but Egypt is still on holiday. But we'll see at intraday, Nigeria trading 0.25% down. South Africa trading the opposite direction, 0.14% up. Well, we'll see Egypt was down, still closed for the Muslim holiday, but it ended in the red. But we'll see Kenya ending yesterday's session again in the red. It was down 0.88%. Now let's see what the Middle East is doing at intraday. Most major equities were trading mostly in the green at intraday. Abu Dhabi is down marginally though, 0.01%. Dubai, however, on the flip side, is up more than 0.5%, 0.59% we see there on the screen. And we see elsewhere, Saudi and Qatari indexes are trading down. Not so good for those two equities at the moment, 0.09% and 0.12% down. And now we move over to the EU, where the French government has announced its 2024 budget, which aims to lower public debt while raising green investments. On Wednesday, this was made known. Now joining us with more is Deutsche Welle's correspondent, Chimboda Chimbelu in Berlin. Chimboda, can you hear me? Okay, I think we're going to come back to we don't have Chimboda right now, but we'll move on to other stories now. We see in the UK, Prime Minister Rishi Sunak has dodged some questions over the future of high-speed rail projects. I think we don't have Juliana at the moment, but we'll come back to that. We're having a bit of technical issues at the moment. Now we see in the US, stock futures were near flat early on Thursday as investors ready for the final trading days of what's shaping up to be a weak month and quarter. Futures tied to the Dow Jones and Industrial Average added 39 points, trading 0.11% up. S&P 500 futures gained 0.08%, while the Nasdaq 100 futures fell 0.07%. Now the moves follow a mixed session Wednesday on Wall Street. Meanwhile, the 10-year U.S. Treasury yield hit a level not seen in more than 15 years in the session. Friday marks the end of what has been a tough trading month and quarter. Investors will watch for economic data on jobless claims, home sales, and the GDP on Thursday. That's today. Traders will also pay attention to Nike's earnings report expected after the bell later today. Now we go over to Asia, where markets largely fell after notching some gains on Wednesday as an uptick in Treasury yields and oil prices put a dent on investor sentiment on Wall Street. Hong Kong's Hang Seng Index slid 1.36% in its final hour after the exchange announced that shares of embattled Chinese real estate firm Evergrande have been suspended. Mainland Chinese stocks were also slightly down on Thursday. Now, Japan's Nikkei 225 slipped 1.54% to end at 31,872 points, the first time in about a month that the index has fallen below the 32,000 mark. Australia's S&P ASX 200 extended Wednesday's losses and lost 0.08%, reaching its lowest level since July the 10th. South Korea's markets are closed for her public holiday. Now look at oil prices now in the global oil space. We see prices rose in early Asian trade on Thursday after surging to the highest settlement in 2023 in the previous session as a steep drop in U.S. crude stocks added to worries of tight global supplies. Brent crude futures climbed 16 cents to $96.71 a barrel. U.S. West Texas Intermediate crude futures rose 20 cents to $93.88. U.S. crude stock fell by 2.2 million barrels last week to 416.3 million barrels, according to government data, far exceeding the 320,000 barrel drop analysts had expected. Crude stocks at the Cushing, Oklahoma storage hub delivery point for U.S. crude futures fell by 943,000 barrels in the week to just under 22 million barrels, the lowest since July 2022, data showed. Now, stockpiles at Cushing have been falling closer to historic low levels due to strong refining and export demand. Now, the crude draws follow production cuts of 1.3 million barrels a day to the end of the year by Saudi Arabia and Russia. Now, let's look at the metal space now, shall we? Gold prices steadied early on Thursday, although prices hovered near a 6-month low, with markets awaiting U.S. economic data for clues on the Federal Reserve's interest rate trajectory. Spot gold held its ground at $1,884.49 per ounce after shedding 1.4%, its biggest daily decline since July on Wednesday. And now you see U.S. gold futures were flat at $1,891.30. Spot silver, however, eased 0.2% to $22.48 per ounce, while platinum edged up to 0.1%, closing at $888.25. Palladium fell 0.2% and is set to fall for a 6th consecutive session if losses hold. Over to Berlin now to the EU, where we mentioned that the French government had announced its 2024 budget. We're going to be speaking to Chiponda Chimbelu in Berlin with the details about that. Chip, what can be read from France's 2024 budget?
Well, thanks for having me. Well, the French government's budget may prove difficult to swallow for ordinary people in France. While the government has announced plans to raise welfare spending and pensions next year, it will be ending the support it has provided to households to help them cope with high energy costs. That means that the vast majority of French people will lose the government assistance that have been helping them with energy bills. Meanwhile, the government plans to raise investment in green programs by 7 billion euros to 40 billion euros. It's highly unlikely that people will welcome the investment in green projects while they're losing government support themselves. And there's already been protests in the past when the government tried to do more for a greener economy. In 2017, higher carbon taxes helped start the Yellow Movement or Yellow Vest Movement, which is basically a resistance movement or a group that was protesting over the cost of living for months. And the government had to withdraw its plans as a result and decided to do more to help households at that time.
So how does France's economic outlook compare to Germany's at the moment?
Well, earlier this month, the European Commission said that the two biggest economies in the EU are on diverging paths. While the French economy is expected to grow 1%, Germany's is expected to go into recession. The EU Commission expects the economy of Europe's industrial powerhouse to contract by 0.4% this year. High energy costs have been weighing on the German economy since Russia invaded Ukraine, and the war forced Germany to look for alternatives to cheap Russian gas. The construction industry has also been struggling and weighing on the economy here. It's bad enough that just a few weeks ago, the British weekly The Economist asked if Germany was once again the sick man of Europe. Meanwhile, France has been benefiting from record summer tourism and higher aircraft exports. Its biggest issue is really getting its public finances under control. Public spending was the main reason behind the decision to end support for households, which of course the government was, helping them with the high energy bills that they were getting. In fact, French Finance Minister Bruno Le Maire said the budget is the first step to help France repair its public finances. And government debt is something that at least the German government, though, can smile about. While its public debt reached a new record earlier this year, the debt to GDP ratio is much lower for Germany at 66.4%. compared to France's 112.5%.
Interesting breakdown there. So what can we expect from the markets today?
Well, European Markets are edging higher today, and here in Germany, the DAX is expected to gain after 5 sessions of losses. Traders will be watching an IPO at the Frankfurt Stock Exchange. German pharmaceutical manufacturer Schott Pharma is going public. Markets will also be, of course, keeping an eye on China's ailing property development Evergrande. News that the debt-ridden company has suspended trading in its Hong Kong-listed shares have, of course, added more uncertainty about the future of Evergrande. It has been a gloomy September for traders who, of course, continue to be worried about interest rates and inflation. And so here in Europe, Germany's inflation data will be watched very closely, and it's going to be released later today.
Thank you so much, Chiponda Chimbelu, for that update. We'll move now to the UK. We're seeing that the UK Prime Minister, Rishi Sunak, dodged questions over the future of the high-speed rail project. We're going to be speaking to Juliana Olayenka in London right now. And Juliana, the Prime Minister appears to be playing dodgeball at the moment. What do you think he's trying to avoid here?
Well, it's a good way of describing it, playing dodgeball. And we know that uncertainty is the enemy of all major projects. And that's certainly the case for HS2, which for our viewers watching in the UK, they'll be very familiar with, because this is a project that has been ongoing for at least the past 10 years. It was put in place basically to provide a high-speed rail link between London and Birmingham. That is the first phase of HS2. It's currently underway, and the argument and the debate and the discourse now, Will, is about the further phases of HS2, particularly in the north of the country. We know, especially when Boris Johnson was Prime Minister, that one of the main aims of this Conservative government was levelling up, basically taking away lots of the money and the opportunities and, should we say, the flash of London and the southeast, and kind of transitioning it to the north of the country. Now, that has been delayed significantly, mostly due to COVID-19, but also because the rail links getting people from the capital city to other parts of the country are not that great. And HS2 was supposed to be the bridge that cements the plans. The problem is HS2 is costing an eye-watering amount of money. Now, when the construction first took place, I think bosses were saying it was going to cost somewhere between 30 and 36 billion pounds. According to the latest estimates, it's going to cost 87 billion pounds, and that is only for one phase of the construction. So that's one of the reasons why Prime Minister Rishi Sunak was playing dodgeball, as you call it, this morning, Will, when he was doing regional media interviews on the radio today. Got to tell you, I've listened to Rishi a couple of times. He doesn't like being pushed. He's not aggressive, but certainly he doesn't like being taken to task. And of course, that's what his role is as Prime Minister. I think, there are always going to be opponents and those who support big projects. A lot of the opponents of HS2 are saying, look, a lot of these bosses are using budgets like they've got a Centurion Amex. We just don't have that in our back pockets. Well, not all of us. And it needs to be streamlined in. But of course, the supporters are saying that HS2 must be extended beyond Birmingham, which is what the first phase is. They want it to go up to Manchester and other major cities, so that some of the levelling up promises that were made during Boris Johnson's administration can be stuck to.
Of course, everyone does want some piece of the good pie, Juliana. So we'll watch and see what the Prime Minister does, if he listens to the people and, makes that extension. But we're seeing good news from the housing sector, because the average mortgage rates on the 5-year fixed deals slipped below 6% for the first time in months. This must come as a relief to homeowners in the UK, I presume, Juliana.
Yeah, I think so. This is good news, but I think, anybody looking at this data is going to be cautiously optimistic. Of course, headlines sometimes don't tell the entire story of what the main body of text says. So yes, this is great. As you said, 5-year fixed mortgage rates have dipped below 6% for the first time in 3 months at 5.99%. So unfortunately, that 0.01% it's going to be very difficult for people to see the fall in their bills. But hopefully this is the start of things to come, because we go back a little bit to before the pandemic. A 5-year fixed rate on a mortgage was 2.55%. A couple of years later, pandemic, Liz Trussonomics, Bank of England interest rate hikes, we're seeing it way above 5%. This is causing a massive issue. Sometimes we look at data and you only see it as data, but if you actually take an eagle eye approach, this is costing hundreds of pounds more on people's mortgages. I've tried to do a calculation, but in Naira, we're talking an extra 600,000-700,000 Naira per month on top of what you were already paying. For most people in this country, it's just way too much, which is why we're seeing default rates rise. We're also seeing, and we've seen this from data, that prospective buyers are being put off. New mortgage sales are down because people are worried about how their rates are. But alas, there does appear to be a light at the end of the tunnel, which is this data today showing that it will fall. And I think because last week we got that fix, didn't we, on interest rates. There was no hike by the BOE MPC when they met at Threadneedle. So perhaps there could be more cautiously optimistic good news for the hundreds of thousands of mortgage holders who are struggling right now.
Yeah, cautiously optimistic. That's a very apt way to put it. But it's no surprise because inflation is coming down sharply. We expect mortgage rates to also follow suit. But how are markets doing at intraday, Juliana?
Yeah, not great. The UK blue chip index is in negative territory. At intraday, we had pretty surprising news from the UK car industry, showing for the first time in 6 months that car production has fallen pretty steeply, actually, at 10%, which is massive in this country. That's really kicked on the markets, and investors are a little bit worried. So the FTSE All Share is down. It's down 0.27%. FTSE 100 down 2 at 0.35%. And the FTSE 250, the domestic market, that's down by 0.57% at intraday. The British pound is actually trading up against the US dollar. It had been falling quite significantly over the past few days, but it's up by 0.5%. The British pound is also trading up against the euro by 0.15% and up against the Japanese yen by 0.30%. Well,
thanks so much, Juliana, for breaking it down for us, always bringing us the facts behind the figures. Now, more stories from the African continent right after the break. This is Business Incorporated. Stay tuned. Thanks for staying with us. Now we move over to Nigeria, well, specifically countries in sub-Saharan Africa, where the International Monetary Fund has advised these countries to focus on eliminating tax exemptions and mobilize domestic revenue to reduce their fiscal deficits. According to the IMF, inclusive participation in the labor force, particularly of women, could lead to an approximately 8% growth in the gross domestic product as GDP of developing countries in the coming years. IMF adds that bridging the gap between the number of men and women who work is one of the very important reforms policymakers could make to revive economies amid weakest medium-term growth outlook. Now, still staying in Nigeria, where the Manufacturers Association of Nigeria believes that the federal government is not clear enough to strategies in implementing the set-out policy to boost activity in the real sector. The Director General of the association, Mr. Segun Ajayi Kadri, who was on our Business Morning show, says that this has caused a level of uncertainty among operators, and it has also discouraged potential investors into Nigeria's real sector.
The CBN has just put out this price verification portal, which is constraining manufacturing imports, because they give you a price range that is obviously unrealistic and not related to what the current realities of the manufacturer is. Is government going to say that this is our policy direction? And they need to put it out to say that in promoting domestic production, we are going to do A, B, C, D. Of course, engage stakeholders in determining that. That's what we are saying. Government, for instance, is saying that the Naira, and the government has floated the Naira rate. So government needs to tell us, having floated it, this is the way I'm going to pursue the adequacy of supply. And this is the way I'm going to prioritize the productive sector so that I can reflate the economy. So the government is supposed to come out to say, okay, we have removed fuel subsidy. Everybody knows that the most important remedy for this is for you to have local production. So this is what my plans are in terms of ensuring that our refinery works, and this is what I am doing so that everybody that is involved queues behind government. I'm just talking of adequate communication, particularly to those who play in the sector and also generally to Nigerians.
Now we move away from Nigeria. Now we go to South Africa, where the producer price inflation, PPI, picked up to 4.3% year-on-year in August this year from July's 2.7%, ending the 12 months of decline. According to Statistics South Africa, the PPI is above market expectations of 3.7%. Now, on a monthly basis, producer prices inched up by 1% in August, the most in 5 months, compared to the market forecast of 0.5% rise. Now, the main contributors to the acceleration in overall PPI inflation were metals, machinery, equipment and computing equipment, paper and printed products, and food products. We also see beverages and tobacco products. However, prices continue to fall for coke, petroleum, chemical, rubber, and plastic products. Now, the National Directorate of Animal Health in South Africa has officially announced Namibia's decision to prohibit the importation of poultry as South Africa faces a severe avian flu crisis. This prohibition covers live poultry, avian species, and all poultry-related products. The avian flu outbreak in South Africa has dealt a significant blow to the poultry industry, resulting in the reduction of millions of broilers to date. Now, Namibia's action aims to curb the spread of this disease. Meanwhile, grocery stores are experiencing shortages of chicken and eggs. Now, the Saudi Fund for Development, SFD, has signed 2 development loan agreements with the governments of the Bahamas and the Republic of Mauritius worth $140 million to support infrastructure development. The parties signed agreements in Riyadh, the capital city of Saudi Arabia, on the sidelines of the World Tourism Day 2023. The loan deal aims to explore potential infrastructural development cooperation in the economic, cultural, and transportation sectors. And that's a wrap on Business Incorporated. Do join us tomorrow for the final edition, the last one for the week. I'm Will Ibang, and I'll see you tomorrow.